Welcome to our channel. Today, we're diving into a topic that's been on everyone's mind. Why did Bitcoin fall in 2026? Let's unravel the mystery behind this digital currency's unexpected downturn. In early 2026, Bitcoin's decline was triggered by a confluence of factors. First, regulatory changes across the globe severely impacted Bitcoin. Major economic powers introduced stringent regulations aimed at curbing the decentralized currency's influence on traditional finance systems. New legislation increased taxes on cryptocurrency transactions, which dampened investor enthusiasm. Furthermore, technological advancements posed challenges to Bitcoin. Although Bitcoin was a pioneer, newer cryptocurrencies with more efficient, faster, and environmentally friendly technologies emerged. These alternatives began attracting investors, reducing demand for Bitcoin. Additionally, the global economy faced significant challenges. A major economic recession led to widespread financial instability, prompting investors to seek safer, more traditional assets. Bitcoin, known for its volatility, was perceived as too risky, leading to sell-offs. Security concerns also surfaced. High-profile hacking incidents reminded the public of the potential dangers associated with digital wallets. Despite efforts to improve security, the perception of vulnerability contributed to decreasing trust in Bitcoin. Social media and influential thought leaders played a role in shaping public perception. Negative narratives about Bitcoin spread rapidly, further weakening investor confidence and creating a self-reinforcing cycle of decline. Let's not overlook the impact of energy consumption debates. As the world focused on sustainable practices, Bitcoin's substantial energy use came under scrutiny. Critics argued that its environmental impact outweighed its benefits, swaying public opinion and policy. Lastly, a psychological shift among investors occurred. The euphoria surrounding Bitcoin's meteoric rise transformed into fear and caution. The psychological impact of past losses lingered, influencing market behavior and accelerating the descent. In summary, Bitcoin's fall in 2026 was a result of regulatory clampdowns, emerging technological competitors, economic instability, security issues, social influence, environmental concerns, and investor psychology. Understanding these factors provides valuable insights into the complexities of global cryptocurrency markets. Thanks for watching. Remember to like and subscribe for more insights into the world of finance and technology.